Entrepreneur MBA podcast purpose is to help existing business owners grow their companies past the 10 million in revenue per year benchmark. Here is your host, Stephen Halasnik.
Welcome, everyone. My name is Stephen Halasnik, and I'm co-founder of Financing Solutions. We provide easy-to-set-up lines of credit for small businesses. I will be your host for today. If interested, please visit fscreditline.com if you're looking for a line of credit for your business. It's always a good thing to have. Again, FS as in Financing Solutions, creditline.com. Over the last 25 years, I have built 6 companies in the $5 million to $25 million range, including 2 companies on the Inc. 500 fastest growing list. I love learning, and I love to meet people like our guest today who have business experience. And today I'm very excited to be speaking with Philip Blows from AQRU, AQRU. Philip Blows Phil is a founder and CEO of AQRU PLC, a business that specializes in helping institutional and retail customers earn high interest rates on their cryptocurrency. AQRU recently crossed the 10,000 active customer bar and is on an explosive growth trajectory. Philip, welcome to today's Entrepreneur MBA podcast.
Thanks so much for having me. Pleasure to be here.
You know, one of the best books I think as business people, we all have certain books that we're really impressed with that stick with us for the rest of our lives. One of them for me was by Robert Kowalski, who wrote What the Rich Teach Their Children About Money. And, he really talked a lot about passive income. And today, our topic is going to be creating passive income and financial freedom for business owners, which, I think over the last 10 years, the concept of passive income has become much more well-known. Would you agree with that?
Yeah, absolutely. And I think, as you say, the body of literature on it has been huge. Kind of going back to the 4-hour work week, I think was one of the big books that I think loads of people always quote, where they, kind of creating businesses for lifestyle and, trying to sort of create freedom of time as well as money. I think it's really kind of coming into the day-to-day lexicon now, and it seems to be, especially as you speak to kind of the younger generation coming out of college, it's amazing. Some of them they've already got 2 or 3 income streams, social media following that they've monetized, or whatever else it might be. It's definitely appearing and is more widely done, I think.
So let's just make sure everybody's on the same page. Why don't you tell us? Let's just define what passive income means.
I think, for me, it's kind of set it and forget it income. So, a lot of people talk about passive income in terms of, it might be sort of an e-commerce business that they've set up and put some work in, and maybe they only need to put a certain amount of time in each week. I think it's almost, to me, that's probably not purely what passive income might be. Passive income is by sort of definition is, you're not having to do anything. It's ticking along in the background. I think then people will look at it to say, well, if it only takes a little bit of prodding every week, a few hours a week, then maybe it's more passive than a full-time job. So it's somewhere in the region there, is just something that doesn't take a lot of stress or kind of time or additional financing, and just generates a nice stream of income in the background for you.
Yep, gotcha. Now let's get into your bio just a little bit, because it's certainly, I haven't really studied much about cryptocurrency. It just hasn't really caught my interest. And, so the thing that you've written about, or that, your bio says, is that you specialize in helping institutional and retail customers earn high interest rates on their cryptocurrency. So tell us a little bit more about that.
Sure. So, I think I was in probably quite a similar boat to yourself. I wasn't necessarily a very early adopter of crypto. So my background is sort of 17 years in traditional finance, where I was trading, I was in sales within finance, doing foreign exchange, all the typical things, and also helping people build traditional portfolios. So the idea when I saw crypto for the first time was naturally incredibly skeptical because didn't really, couldn't really see something. I guess people were just shouting about it as being this amazing, wealth creation event, which was highly speculative and, was very, very volatile. All the things that typically didn't appeal to me as an investor. So I think I was quite late to it, but what emerged from the initial kind of speculative craziness that you saw in crypto was sort of the real world use cases, which is a concept called decentralized finance, which is very much imagine being able to deposit, borrow, and lend money, but without a bank in the middle. It's effectively like an online peer-to-peer platform whereby borrowers and lenders come together without a bank taking a huge cut, and it's all done online. It's all done via what's called smart contracts, and consequently, all of the earnings go back to the borrower or the lender. So when these sorts of platforms started appearing, that kind of sparked my interest. Because I suddenly saw a way that you take these cryptocurrencies, and really only the major ones. If you think about the top cryptos are Bitcoin, Ethereum, and then this category of crypto called stable coins. And stable coins are simply cryptocurrencies that track the value of the dollar, so they don't have all of that crazy volatility. And there are counterparties in the market who really want to borrow these assets from you. And the job of what AQRU does is to go out on behalf of our customers, find the most creditworthy ones of those people wanting to borrow, and sort of optimize a portfolio to generate interest on it. So a typical customer might come to us, say they've got $50,000 worth of Bitcoin or $50,000 worth of just normal dollars. And they say, well, I can see on your platform, you're paying 12% interest on, say, US dollars once I convert them into these dollar-backed crypto. I don't want any of the hassle of kind of going out and trying to work out which counterparties in crypto to lend to. So I'd prefer an expert to do it. So they deposit the money and it just generates that kind of monthly cash flow for them. And you can do that with Bitcoin, you can do that with Ethereum. So the slight difference with Bitcoin and Ethereum is, unlike the dollar, if you're holding Bitcoin, you're hoping that the price of that Bitcoin is also going to go up massively in price. So not only are you getting this passive income, but you're also hopefully getting a lot of capital appreciation as well of the underlying asset. And so just simplifying that whole process, making it really easy to use and putting it in an app that you can track and just sits on your phone. The interest ticks up in real time. Yeah, that's what we've built and that's what we do.
Well, what do you how do you determine, like my business, for example, we provide small business lines of credit. We're looking at documents. We're looking at the past history of the organization. We're looking at a credit score. What are you looking at to make that determination? If are you investing in a person, a company? What are you investing in?
Really, really good question. Because this is a big fundamental difference. So what you're effectively doing is you're investing in an online platform. So basically a peer-to-peer lending platform. Now, so what you're doing there is it's a slightly odd concept, but because these assets sit in what's called a smart contract and they're kind of governed by code. At that point, sort of no one, obviously you still have a claim to them, but ownership never transfers to another counterparty. So in essence, if the party that you lent to went bust, you wouldn't lose your assets because they're all fully collateralized on these peer-to-peer platforms, and it just the way that the contract works, it just immediately pulls the assets back and pays them back to you, and that kind of can't be undone. So what you're effectively doing with this sort of decentralized finance lending product is you're exchanging counterparty risk, which is what you're obviously very familiar with effectively technology or hacking risk. And you'll read about these hacking events that happen in crypto. Generally comes from sort of poorly run or poorly managed, peer-to-peer lending platforms in the crypto market that have been hacked, and those smart contracts have been tampered with, and the assets have essentially been stolen. So the job of a professional company like ourselves, and this is something that we've been doing for as long as sort of decentralized finance has been around, is been going and assessing these platforms finding out which ones are good, which ones are bad. And, we have to go and you have to look at the code base. We have to look at the team. We have to look at there are all third-party auditors that can go in and actually do a full operational and code audit on the actual platform itself. And only the best ones have those. So that, that's a prerequisite that we would always have in place. And then it's also just looking at the return and how many assets they already have. There's a bit of a survival of the fittest in the crypto market. So the best platforms have billions and billions of dollars on them, and everyone in the world has already tried to hack them and failed. So it's almost like that, along with all the other decent kind of prerequisites that we have before we put any money into a platform, make quite a robust process.
A 12% return is a pretty high return, and usually there's a risk associated with the reward. So at a 12% return, why is the 12% return so high? There must be the risk there associated with it when you're looking at the stock market returning on average over a 30-year period, a 6% return, a 7% return, and yet you're paying a 12%. Why?
I think there's a couple of reasons. First of all, the market's not entirely sure how to quantify the risk of kind of blockchain technology. And secondly, there's a couple of sort of nuanced points with it. First of all, the rate is only really able to be that high if there are people out there willing to borrow at a higher rate. And the reason that there is because currently, if you look at what if you look at what the counterparties who are borrowing are actually up to, they are doing things like they're leveraging their own positions. They are doing what's called cross-exchange arbitrage. All these sorts of things. Basically, there's a crypto remains a hugely inefficient market. So the people who are borrowing at 12% are out there making, 20, 30, 40% a year. There's that kind of sort of fat still left in the crypto system that they're very, very high returns. Now, probably there's a slightly different sort of nuanced point to how these platforms reward their customers as well, which I would argue actually doesn't increase the risk of the transaction. If you picture your bank, when you make a deposit in your bank in your bank, they'll pay you a very small interest, and that's it. Now, if that same bank said, okay, well, we want to reward you, Stephen, for being a customer. So in addition to that interest, we're going to give you shares in whatever it is, Chase Bank as well, to top it up to an additionally high, more percentage, because we want you as a customer to also be an owner of the company. That is how decentralized finance actually works. So what happens is we deposit these tokens onto these platforms, and they will actually issue us as a reward with their token. Now, that is an outsized reward. It can be like 10%. So then you have like a base yield of, say, 4 or 5%, which is kind of what you call the risk-free rate of crypto. And then there's this big kind of ownership stake that you get on top. And that kind of reward, which is just you getting ownership in the protocol, isn't necessarily saying, well, you're getting this because it's really high risk. You're getting it because it's a different kind of economic model. So that's the slight argument we've got. And what we would do, obviously, those tokens are then, they tend to be very volatile, very illiquid. What we've got to do as an organization then is then convert those tokens into whatever the base asset is. So back into dollars again as cheaply as possible. So just doing that regularly is something that we do to sort of not expose ourselves to the risk of additional tokens.
So you said you have over 10,000 active customers, right? Tell me what a typical customer looks like.
So we tend to. So it's probably worth saying who the customer's not. So the customer is that doesn't use us is someone who's probably been in crypto since like 2011, 2012. Are really, really like passionate about the space and doing it themselves. And because most of people who want to get really into the weeds, they want to manage all of their own kind of protocol risks, own their own coins, these sorts of things. They tend not to be the customer. The kind of customer that comes to us is someone who's, they've done some research in crypto. They know it's a space. It's been the best performing asset class of the last 10 years, but they don't want the hassle of doing it themselves. They don't want to be getting a decent, because to get these returns, you've got to open these kind of DeFi wallets, like the most common being a company called MetaMask. You've got to connect them to protocols. You've got to you've got to self-custody your own assets. these are all really quite complicated and well beyond what most sort of your everyday investor wants to actually do. So, the customer comes to us, someone who's really like a professional investor that says, look, say I've got $1 million portfolio. It's hopefully not too much in bonds, but a chunk of it's in equities, a bit's in property. I want to allocate 5-10% to crypto because I think it's a long-term asset class that's, obviously paying high yields. And it's time I got some exposure to that. So that tends to be the average customer. It's not the speculative small investor that is trying to triple their money overnight. We intentionally don't have the kind of the coins on the platform which are really new, which are like, the next hype coin. It's like, that's not what it is. How most people lose money in crypto. We feel by restricting the kind of coins people can invest to just the really big successful projects, paying them high yields, that tips the balance in the favor of the customer who hopefully with us is a long-term investor. Because that's something I'm really passionate about being able to do. Most investment platforms, or trading platforms, the customer loses money over in the medium term. I want to be able to turn around and say in a few years' time, well, every customer we've got has made money unless they've just been a little bit unlucky and bought the top of a short-term spike, that sort of thing. So I think it's that tends to be the kind of customer. So the mass affluent, crypto curious, and and who's looking to sort of look at this as yields disappear out of traditional asset classes like bonds, and they're seeing inflation rise. They know they've got to do something a little bit more active.
Now you're based out of England, and so is I'm of course in the United States. If somebody in the United States goes and and makes an investment, so to speak, I don't know is that the right terminology, an investment in your.
So effectively, they're using us to generate yield. So yeah, it's not an investment per se as in the regulated sense, but it's it would be effectively staking the asset on our platform.
What would see? I know you're in England, but what's the tax ramifications of working with somebody in England if you're in the United States? You must have American clients. So what do you know about it?
So sadly, at the moment, due to some recent changes, I'm not sure if you saw, but two big companies, BlockFi being one of them, just paid $100 million fine to the SEC. So we are not onboarding US customers at the moment. And sadly, that puts you in the minority of countries globally. It's a market that I'm very passionate about. I've got a close affinity to the US. My parents lived there for 6 years, and I spent a lot of time there, which I really liked. But I think it's a case of sorry, so it's a case of I think just trying to do it as the regulatory picture becomes more clear. I think we'll absolutely be making sure that it's because it's the biggest market in crypto currently. But in terms of tax, this is where I'm on the whole, this is obviously not advice, but it's what you're looking at with tax is you're having to pay you're earning income on an asset, so it's taxed as income on the asset, and you're also having to, if there is a capital gain on the underlying, then as you sell it, you would have to pay that capital gain. But most people do this because they don't want to sell the underlying. They want to try and get some interest out of it, but they don't want to realize maybe they bought it years ago and it's obviously gone up a lot in price already. But they're doing this because they want to basically try and get some sort of income out of an asset otherwise, which is just providing some sort of capital appreciation.
So how long has this company been around now?
So we've been around 18 months. So not long.
18 months. Mm-hmm. And why 18 months? What did you ramp up to 10,000 active customers? That's an incredible trajectory.
So yeah, it's been a little wild. So I think we in sort of January of last year, really, it was still a PowerPoint, and we went out to seed investors and we raised around from some angels that sort of we knew. Crypto, there's no hotter market right now really than crypto, and in the UK at least, it's getting more venture funding than sort of traditional fintech. So we kind of identified very early that this was going to be a very high growth business very quickly. So we kind of raised $1 million for the seed round. And then about 6 months later, after we'd sort of hired the team, built sort of the first MVP of the product, we were approached to effectively do a SPAC where we reversed the company into a listed entity in the UK that trades on the UK Stock Exchange. And in the process of doing that, which we completed in October, we raised another £10 million for that year. So we had a bit of a war chest, and we also think this is, as you said, 12% is really high. You're right, and we have competitors out there. We are paying top of the market at the moment. Just so happens that we have a very experienced investment team, and we're of a size where we can generate higher yields for our customers. But we think this is a land grab. So, we're very, very aggressively, acquiring customers. And, that 10,000 users that Mark we had was a month ago. And, before that, we were growing at 100% a month. So, we're expecting that rate to increase, to persist. So, I think this is going to be a land grab. We've got to get big quickly, and I think we've designed a product and launched it now that seems to be really getting some good traction with customers, great feedback. So I think we've got it. We want to be having customers in the millions in the not too distant future. That's the kind of growth curve we're going to hopefully stay on.
Well, what were you doing before you started this?
So I'd worked in pretty much startup financial businesses for most of my career. Always smaller businesses, and I quite enjoyed that because it kind of allows you to gain experience in multiple areas of the business. So I'd been doing I'd started a kind of an asset management firm quite young. But almost as an entrepreneur, I guess you'd call it, within a larger company, they needed someone to set up kind of a trading desk, and it just happened I was sort of right place, right time, with a client base and things like that. So kind of started an asset management business in my early 20s. Did that for kind of 5 years. Then financial crisis hit, and sort of the parent group wasn't particularly happy with the business. So kind of scale back some of the operations. So I actually moved to do more of an institutional kind of finance role, where I was kind of sitting in between investment banks, and then as they moved money around the world, I was sort of facilitating that, and it was kind of a core broking job, which was a lot of fun. But then after that, sort of in the early sort of 2010s, came back and to the UK and started building fintechs. So worked at a robo advisor for 4 years, then a payments company, and then founded AQRU. So it's been good.
So tell me about how did you notice the opportunity with AQRU? Tell me, what was it? What did you say?
I think, if rewinding before AQRU to this, when I was at this robo advisor, I spent kind of 4 years running around the UK, and in that time probably spoke to, I don't know, 10,000 people roughly, and went through this kind of app. And what this app did was just ask them very basic sort of questions around their finances, and tried to improve, work with them to improve just the basics and get to the point where they could save money each month into the app. But what I kind of realized there is just this huge, I don't know, what you call it, kind of resistance for people when it comes to money. People glaze over very quickly. Anything complicated becomes, is just won't be done unless it's like right there in front of them, really simple to do. It's a click of a button. People don't engage in their finances generally. So, I think that I think doesn't matter what you're doing. If you can make it simple for people, then that's a business. Doesn't matter what you're doing. You've seen it with Airbnb, you've seen it with Uber. They're all just simplifying customer experiences. Really, so when I looked at crypto and I looked at the world of decentralized finance, it's like, yeah, there are great yields there, but there is no way in hell anyone, 99% of people will never engage with this. It's far too complicated. So all it needs is someone just to simplify that experience. And so that's what we built. We are the filter that sits between the customer and what is quite a complex way of generating yield in the background. Yeah.
What's the minimum investment that someone has to do at AQRU?
I mean, it's a small. There is no minimum investment. Some people, everyone who signs up, we give them $10 just so they from the moment they log in. One of the things we really like is kind of being able to earn interest instantly. So I was quite keen that the customer sees that from the moment they log in. So we give them $10. You land on the platform, you can see straight away that your balance is kind of increasing, which is quite a nice little endorphin hit. But yeah, you put any amount you want in. We sometimes see €5 arrive from someone just testing the platform. So there's no minimums.
And when can you get out of it? So if I put $100,000 into the platform, when do I get my money back?
There's no lock-ins, so it's daily liquidity. So some crypto platforms are instant, but we've intentionally not gone instant because we kind of eyeball every customer withdrawal to look for kind of anomalies to make sure that they no one's been hacked or something like that. So it's one of our kind of security features. So if you ask us for the money back before 2 p.m. UK time, you get it back at 5:30 on the same day. If it's after 2, it's the following day.
So I'm sure you've seen or heard the behind Ponzi schemes, and how can you assure investors that that's this is legit?
Why are we not a Ponzi? Yeah, how do we know exactly?
It's not so. Yeah, I guess that's part that. That's just well, I mean, one of the ways you're not is you can get your money back instantly. I don't know if Madoff had that capability. Probably, I don't know if he had a lockup period or whatever. Do you know if he had a lockup period?
I mean, I would assume for like a fund like that with the billions he had in it, he probably did. And it's something that we are very, very conscious of because again, coming from the world of traditional finance, someone's saying 12%, I'm like, don't be ridiculous. That was my that was my first impression when I arrived in crypto years ago, and it still is when I speak to people. And this is part of why we went public as a business, because most crypto businesses are pretty opaque. Don't know who owns them necessarily. Don't know where they're based. These sorts of things. But with AQRU, the parent company, it trades on the London Stock Exchange. We're just about to move to a dual listing in Canada as well. It'll be quarterly reporting that we'll be putting numbers out quarterly. It'll be audited. It's transparent. And hopefully there's a lot of credibility coming with the fact that we're regulated by the exchange. And, we just wanted to go a bit further than other crypto companies have. There are a few listed companies, but, there's a lot that aren't. So that was really important to be very transparent with our finances, to show what we've got in our books, that sort of thing. So, that, and on top of that, we do get audited. We've got operational audits from third parties that we haven't completed, as well as sort of tech audits. So we're doing everything that we can to show, we're intentionally open, and we want to be challenged by our customers, and we can meet those challenges when requested.
So what happened with the $100 million fine from the SEC on the company you mentioned? What were they fined for?
So, I mean, in the way that they were marketing, they were very much almost marketing this as almost a bank account in the US, which paid very high levels of interest, and kind of the referring to it as as an interest account, whereas it's not an interest account. It doesn't have the usual investor protections that you get with a bank account, these sorts of things. So I think what the SEC was suggesting is that obviously this company may have strayed over the line in certain areas, and obviously they've done it. They've amassed a huge amount of deposits, and that I think they've just the SEC ruled that they've fallen foul of the regulator, so they got fined for that.
So what would have to happen in order for you to open up your platform back to the US?
We want to see real regulatory certainty. The fact that this would be classified as a security is not a bad thing. A lot of people in crypto kind of get worried about the fact that it's all going to get really regulated and all these sorts of things. I speak to a lot of banks and institutions who are who want to get into crypto but won't, because the regulatory certainty just simply isn't there. But the moment it is, and I actually think that this will be the catalyst for the next big kind of wave of a bull market in crypto, is going to come weirdly from regulation. Because the moment it is, all this institutional capital sitting in the background will just flood into the market. So, once the US can really say, look, this is really clearly what is a security, what isn't. If this is a security, this is what you need to do. And it's there's no kind of gray area to it. That's what we're looking for, just that certainty. And and then we'll be making big inroads into the US hopefully.
Do you think as your company continues to go on, uh, and and as it continues to gain credibility, that the interest that you would pay will go down?
I mean, we're seeing certain pressures now. We've got companies who are in a similar space to us who have $20 billion of cash, and they are paying 8%, and we're paying 12. So there's almost nothing to stop those same companies becoming customers of ours and just dumping all that money onto us at 12%. In which case that will just skew the price. That will close that kind of arbitrage down. It's not happening yet, and I think it's something we've got to be aware of, because I think we are getting a lot more institutional interest from people who probably are looking at us and saying, "Well, you guys are just paying too high." It's not whether or not we can generate it, but it's the fact that we're giving so much back to the customer that institutions will start almost taking advantage of that. So I think that's something that we've got an eye on. But so it's not happening just yet. But we're hoping retail customers are going to see that difference and say, you know what, maybe I'm not happy with a Nexo or a Celsius right now who are paying 8%, and I can come to a crew who are paying 12. So that's really the kind of customer that we're after.
With the notoriety and the press in regards to Russian oligarchs or Russian money, and England's been certainly the press has said that England's been tougher on trying to get to that money. Have you seen them come to you to talk to you or to address any issues with the cryptocurrency in regards to your organization?
Not yet. So I mean, obviously, there are new rules and sanctions and policies that we have to put in place to ensure that we are we're in line with everything that the new laws that have come out. Yeah, but we weren't. To be fair, we weren't onboarding Russian customers beforehand either. To be honest, even before this latest wave of kind
Why
of
not?
sanctions. We have we our compliance team does a country by country risk assessment, and it fell outside of the parameters that we have. So we want to we're not only trying to be the simplest place in crypto, but the most compliant exchange around as well. I think there's a risk of a lot of companies that kind of cut corners early in their life cycle, and as regulatory scrutiny continues to mature in this space, some of them are going to be they're kind of dead men walking, because the moment a regulator goes in there and looks at what they've done previously, they'll fine them or shut them down, and they'll never approve them. Whereas we can sort of hand on heart look at our entire client base. We know that from day one we've done everything absolutely to the letter of any law that is applicable for the customer. So I think there's you know we will always be on the slightly risk averse end of the crypto market in terms of the customers we onboard. There's others that don't, but for us, we don't think it's worth it, because we're aiming to be a mainstream player that is works with regulators, not against them. So we'll be inviting a lot of regulatory scrutiny going forward in our kind of company history.
Is it in my business that in financing solutions, there are when we're looking at approval guidelines, there are a number of things that are black and white, right? But there are also a lot of things that are gray.
Yeah,
Things that you have to make a decision on. That it's not just an algorithm can kick it out, so to speak, right? Like if you're under $100,000 in revenue for a business, well, it's 200,000 for a business. We're not going to work with you,
Yeah.
right? That's the black and white, right? Uh, but then there's other things that you look through, and you have to make a judgment call, right? Uh, is that it's one of the advantages we have because if you're getting a line of credit with a bank, there's no judgment calls. It's black and white,
Yeah.
right? So do you find in your business that there are a lot of gray areas, or or do you find that it is pretty black and white?
When we're onboarding customers, I think it's pretty black and white. I mean, because
Yeah.
we've set it to make it intentionally so, and there's a lot of there's a lot of things you've got to do just to make sure that interests are in the right place. Obviously, I have no influence over over the compliance process. Obviously, I ensure that the works are the structure is in place, but they have the final say. I can never overrule someone in compliance, because I obviously have a business development bias to what we're doing, and they don't. So yeah, I don't think it is particularly black and white for us. Sorry, it isn't particularly grey. It's very
Gray.
black and white.
Yeah, yeah.
So
That
yeah.
drive you crazy? That drive you crazy sometimes?
Well, no, it's I
Not
think
the black and white, but this the compliance area is. I mean, you're dealing with. I guess since you're dealing with such a high volume, that you don't get emotionally involved in any particular one deal.
that's true, and I think I've whereas previously in my career I worked in sales in sort of regulated institutions, and I would get very frustrated with compliance there because it was for me it was like if I didn't get the deal through, I didn't get paid, and really the risk wasn't kind of on me if I'm being blunt, but my role as CEO is not just I've got to look at everything on a risk adjusted basis, and this is I mean, absolutely the top priority. It's the one area that, if there is regulatory risk, we don't do it. It's simple as that. We don't, it's just not worth it. So I think, and that's why those decisions are totally out of my hands. And, I don't get frustrated by them now because, I really do believe that they're there to protect us. So yeah, I'm happy with how the team deals with it.
Last question, because I'm very curious, and of course, most questions I ask is because I'm curious about it. Uh, the countries that you will not work in. So you mentioned Russia. Uh, what is it about that? Because a cryptocurrency is a cryptocurrency.
Yeah.
So what could I don't know enough about it. Is if there could be a fraudulent cryptocurrency that's legit. Uh, what is it about like a country like Russia where you would say your compliance department would say we're just not going to work with them?
So there's not wanting to pick out Russia because it's one of many, I'd say, but what you're really looking at is because we take custody of the asset, we're effectively, and it might be crypto, but it could also be traditional currency as well. So we need to make sure that there have been adequate controls by local financial institutions, that those funds have been integrated into the financial markets in a gone through a rigorous check. So if there's a country where you can walk into a bank and dump a load of cash on the till, and no questions asked, they'll just credit your account with it. you know that's clearly a country that doesn't have adequate kind of money laundering controls in place.
Oh,
you know so it's a way of like protecting kind of ourselves from downstream failures, is by saying, what do we think of the regulatory environment of the local country. And there's a lot of guidance out there from most global regulators and the most regulators. So there's a pretty tried and tested standards, and this is something that countries work very hard to remain on the good list, not the naughty list. Because the moment they fall into the naughty list, often you find a lot of banking services are withdrawn from them because they don't want these countries to be connected with the wider banking networks, because it's easier to kind of layer funds into the financial markets. So that's really what we're looking at, is what is the outside of what we're doing, what are the controls in place in that country? And does that increase or decrease the risk of us accepting customers from that region?
Well, it's all good stuff. I learned a lot. I appreciate it. That's really kind of all the time we have today. I'd like to thank so very much Phil Blows from AQRU. Is that pronounced correct?
That is
AQRU?
correct. Yeah, as in accruing
Yeah.
wealth. That's the thing.
Yeah,
Accrue,
gotcha.
yes.
It's AQRU for coming on to today's podcast. If you like today's podcast, please feel free to share it with a friend and also subscribe on your favorite podcasting app. And also, if you feel that today was a 5-star or past episodes were 5 stars, please give us a review on your app. It really helps us get the word out. The Entrepreneur MBA podcast has become extremely popular. Very proud of that. I think we're going in our 4th season. We've done over 100 episodes. And I just really try to bring really good guests on. And Phil was a great guest today. If you're looking for a line of credit for your business, you can call us at 862-207-4118 or visit our website at fscreditline.com. That's FS as in Financing Solutions, creditline.com. Phil, if anybody wants to get in touch with you or your organization, how would they go about doing that?
Best way is go on the App Store, download the app. It's on Apple, Android, and on the web. There's an intercom function there. We've got an amazing customer service team that will educate you, will walk you through the process, and we get amazing feedback about them. Or just reach out to me on LinkedIn. That's probably where I'm most active. So just Phil Blows there, and you'll it's I try and respond to as many sort of messages that I get as possible.
Yep. So Phil, thanks for coming on today.
Pleasure. Thanks so much for having me.
And just a summary of today, and and thank you all for listening. I think the concept, like Phil said, the 4-hour work week maybe was the start of passive income. The idea of defining it anyway. I'm 57. I have one business. I have a couple businesses, but one of the businesses I have, my business partner and I specifically started it so that we could have passive income coming in. And it's really worked well. And I think if you have an existing business, it's always a good day to do the exercise of saying, what other type of passive income could I have? I actually have 2, because I have commercial real estate. I have this other business that I work, Financing Solutions, I work in day to day. So it's a good exercise to look at it, regardless if it's investing in cryptocurrency, it's investing in the stock market, if it's real estate, if it's some other way that you can gain more income. So take a look at it. It's a good exercise to sit down with a cup of coffee and kind of brainstorm what else you could do to have some passive income. And, I think it's something that's worth doing. So everybody have a really fantastic day. We'll talk to you soon. And please listen to more Entrepreneur MBA podcasts.